After the Dow Jones and the S&P hit fresh highs on Thursday, and after Federal Reserve Chairman Ben Bernanke reiterated his commitment to easy monetary policy, stocks were lower across the board Friday afternoon, pressured by some disappointing tech earnings reports, as well as investors just taking a breather. But first, investors today, they have been closely watching to see the reaction in the municipal bond market after the city of Detroit officially filed for the largest ever municipal bankruptcy filing in U.S. history late on Thursday. Now, Kevin Orr, a bankruptcy expert hired by Detroit in the month of March, he made the Chapter 9 filing in a federal bankruptcy court. Meanwhile, overseas markets, they are beginning to watch a meeting of G20 finance ministers in Moscow set for today as well as Saturday to see if global policymakers can do anything further in order to calm recent volatility and boost global growth. And the Nikkei 225 index, that was down from a two-month peak on Friday, and earnings season continues to be in full effect. Also, the combination of soaring oil prices trading above $109 a barrel and the dollar continuing to trade around its relative steady mark against the euro currency this afternoon has helped pave the way for quite the interesting session for the Dow Jones. Speaking of which, the Dow Jones Industrial Average declined, dragged lower by Microsoft and Hewlett-Packard. The S&P 500 and the Nasdaq also on the downside, while the volatility index traded below 14. Now, in a breakdown of today's major market movers, we first begin today with Google as well as Microsoft, which tumbled. This after both tech giants disappointed the market after the closing bell Thursday with quarterly earnings and revenue that fell well below Wall Street expectations. At least 8 brokerages cut their price targets on Google, while 7 cut their price targets on Microsoft. Also amongst techs, Advanced Micro Devices tumbled more than 10% after the chipmaker said its gross margins would fall, even as the company forecast better than expected revenue growth in the third quarter. Intuitive Surgical plunging nearly 15% to lead the S&P 500 laggards after the maker of the Da Vinci surgical robots slashed its 2013 revenue guidance and added that the FDA has issued a warning letter after a facility's inspection. And lastly, Schlumberger rallied after the oilfield services company topped earnings expectations as drilling activity outside North America touched a 30-year high.